The Southwest Florida metros are often grouped together, and why not? They're all located close together. However, when it comes to the individual and park markets, they really share only two things in common: lots of sun and very little rent growth in all but one spot. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Southwest Florida update. And taking a look at Southwest Florida, we're breaking this down into four individual spots: Sarasota, Bradenton, Fort Myers and Cape Coral together, and Naples. Take a look at this occupancy chart. You're going to see four lines here, so a lot of lines, but you can see that the southern metros are going to be the two bottom lines, Fort Myers and Naples, back in starting in early 2009. You can see those were hit the hardest during the recession. Occupancy rates around 86% back then. Sarasota and Bradenton were also in pretty weak shape with the rates around 90%, and since then all have improved, but there certainly are some clear disparities, and they fall neatly into three groups. The city that has the highest average rent rates, Sarasota, it sits on the top, 95.1%, so it's essentially recovering the occupancy front and looking pretty good, especially in comparison to its larger northern neighbor, Tampa. And then we have Bradenton and Naples, which aren't too far behind Sarasota in terms of the average rent levels, and they are a step behind Sarasota with occupancy rates around 93.5%, but big improvement of late, especially in Naples. And then we have Southwest Florida's most affordable market, and that is the Fort Myers Cape Coral area, and this one ranks among the nation's very worst with an occupancy rate of just 89.6%. And this one also saw the least improvement in the past year. And we often point out with these more affordable areas that they are more dependent on employment change for their apartment demand story. And that is certainly the case here, and that helps explain why we have the weakness in the Fort Myers area. Take a look at this chart showing annual employment change, and you see that job change has been pretty flat in both Naples and in the Sarasota-Bradenton area, and we are combining those two because that's the BLS groups those two together. And then in Fort Myers Cape Coral, they have lost nearly 3,000 jobs in the past year, so just haven't been able to get apartment demand back on track. Let's shift gears to pricing, and we told you earlier the rent growth has been pretty minimal in all but one spot, and that spot is Naples. Very strong rent growth there. Rents up 7.4% compared to a growth of 0.6% in Sarasota, 0.1% in Bradenton, and in the harder hit Fort Myers, Cape Coral area, rents are down 1.7% year over year. 7.4% for Naples, that's just not going to be sustainable going forward. And really all four of these spots are going to have a little bit of struggle continuing to recover. And that's because there remains a lot of shadow market condo rentals in these markets. A lot of apartments were converted into condos in the previous cycle. And we've also had a lot of construction for condos in that previous cycle as well. And that's going to be an impediment for the apartment market going forward. That wraps us up for Southwest Florida. Until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.